Hey, what's going on everybody? Welcome back to my channel. My name is Oscar, and in this channel we talk anything that has to do with wealth building, but more specifically wealth building through the stock market. In today's video, I will be briefly updating you on how my stock market portfolio is doing. I thought it'd be a good opportunity because I've made a few changes. I've added a new company to my portfolio apart from Pfizer, which I mentioned in the last video and went into depth about why I decided to buy that company, but also because there's also been a bunch of crazy news going on in the world right now. So I just thought it'd be a good opportunity to kind of show you how those news have affected my portfolio, whether it's positively or negatively. And more importantly, the lesson that I want to talk about today is that you don't want to invest in the stock market with your emotions. It's an easy way, if you're new to the market, to kind of get discouraged and lose money fast and think that the stock market is a scam or that you can't make money with it. So with that being said, I'm going to take you down to my portfolio so you can see how it's been doing so far. As always, if you like this type of content and want to stay up to date with how my portfolio is doing or any other stock market related news, make sure to hit the like button to let me know that this type of content is worth watching, and also subscribe down below to stay up to date. Okay, so here's my portfolio. Current balance sits at $7,398.83 with an overall return of 28%, which is pretty good over the past 6 months since I started keeping track here in July all the way up to now. If we look at the past month, ever since I started making YouTube videos, which was a little bit before December 11th, my portfolio has gone up almost 10%. The dip you see right here basically is because I sold out about $1,500 worth of Apple and Tesla stock. I didn't completely sell out of the company, but I did sell a little bit of my positions because I had tons of profits. If you missed the last video and the previous video, I talk about why I sold out some of my position in those companies and why I decided to use that money and reinvest it back into different companies. Basically, I go into depth as to why I decided to invest into Pfizer, the pharmaceutical company. If you haven't seen that video, I'll go ahead and leave a description or a link down in the description so you're able to watch it. Then my newest acquisition that I did without kind of making a video about it was I bought Carnival Corporation, this company right here. If you don't know about Carnival Corporation, they're the largest global cruise company. They basically do luxury cruises down from like Florida to Mexico, or California to Mexico, things like that. But what I like about it is that they also have ships all over the world, over 100 ships in the seas. Its portfolio brands include Carnival Cruise Lines, Holland America, Princess Cruises, and many others. They have ships that travel through Germany, down in Southern Europe, Australia, Alaska, and in the Canadian Yukon. They have over 12.5 million guests annually. So what I like is that whenever it's summer over here, they're making money in like American cruise ships. But then when it's winter over here and it's summer on the other side of the world, then they're making money in the Australian ships that they got on the other side. So it's a constant flow of money coming in. If we go back to their valuation, which is what I really like to see, I ended up buying a little over 10 shares for a total worth of $500. I bought them at an average price of $48.59. But what I really like is that I bought it for a P/E ratio of 11.2, which I also go into detail in the last video. Basically, for every $11 that this company makes, I get $1. The lower the P/E ratio, the better. And also a 4.09 dividend yield, which I'm excited because I'm gonna start getting paid dividends in March. So I'm excited to see what that looks like. Projected if I just stick with like the 10.29 shares, I should make about $20 this year worth of dividends in this company. So looking forward to that. Overall, pretty much all my stocks are up except for Realty Income Corporation, which I like because I'm still trying to build this position. So I'm looking to buy at a cheaper price than I actually bought it at. If we go into it real quick, average price that I was buying at was 75. Current market price is at 73, so it's cheaper. It's not super cheap, but it's cheaper than when I bought it at, so I could potentially buy some more. I'll see what I do with that. And then the other company that I'm down on is Boeing, which is the one that I'm currently down almost 10%, which comes out to $62.73. It's unfortunate that this one is the one that I'm the most down on at the moment. Boeing has been taking a lot of damage in the past year, more specifically in the past week, mainly because of the whole issue with Trump going out and ordering to kill one of the top Iranian generals out there in Iran. And most recently, another Boeing plane ended up crashing, and now they're saying that the Iranian military was the one that shot it down. I'm not gonna get into all the details about that. That's not what this channel is about, nor am I an expert in foreign relations and things that have to do with war and that type of thing. But I do want to talk about how that affects the stock market, because crazy events like this do affect the stock market, and investors tend to kind of throw all their rational thinking out the window and just start acting with strictly emotions. So that's why I think it's important to talk about this. If we take a look at the S&P 500, which is a composite that tracks the 500 largest US companies, at the time that these news broke out last Friday, people got really scared since all the World War III headlines started to come out, and the market started to reflect that. People started to sell off, and the markets all went down about 1%. The markets were down for pretty much the duration of those news, but since then, they have recovered and even gone past the levels prior to Trump killing that Iranian general. All these news, what they basically did was create paranoia and fear in the stock market, which caused a lot of people to lose their rational thinking, forget about the fundamentals of the companies that they were invested in, and just completely sell out, as you saw in the market with that sharp drop that happened. When you're down on a company and you sell out of it, all you really do is lock in your losses. Little do they consider that the market eventually has to come back up. In this case, it only took about a week for it to come back up and surpass the levels prior to Donald Trump killing that Iranian general. All they really did, they didn't give themselves the opportunity to regain the money that they lost, plus gain some more. If they would have stuck to the fundamentals, they would have known that these types of events, people forget about them. I mean, I'm not downplaying the severity of these events, but that's usually what happens. People forget about it, and they regain their confidence and then reinvest back in the market. But at that point, the market is at a higher level, so they're pretty much having to buy at more expensive prices than they did when they were originally in the first place. Perfect example showing that when something negative happens and eventually people forget about it and start reinvesting back into the company was when Elon Musk was on Joe Rogan's podcast, and he decided to smoke some green, and the public did not like that. They saw that as he was unfit to be a CEO of a multi-billion-dollar company, which caused for the stock price to plunge like no other. Fast forward to now, this is the most valuable car company ever, worth over I don't know how many billions of dollars. And just to show that, people forget about the things that other people do. So just like here, this event is gonna get thrown into the past. People are gonna gain their confidence back in the stock market and start reinvesting their money once again. Same thing happens when the stock is going up. This is what's called fear of missing out, or FOMO. You see this with Tesla in the past couple months. Tesla has been just straight shooting up like crazy for the past 3-4 months. And what happens is when people see this, more and more people start to jump in because they say, oh, this stock is hot. I gotta get in and try to make some money. All this does is create more buying pressure, which causes for the stock to keep rising in its price. And people are starting to buy at more and more expensive prices. For me, I started buying Tesla back in the first quarter, March, April, May, and into the summer when it was in like the 240s level, which is my average price on Tesla is 248. This was at the time where all the analysts didn't think that Tesla was going to be a profitable company. CNBC had a bunch of headlines saying that they're not going to make any money, that Elon Musk is going to have to need to pull some more funding. But what I was focused on was the numbers. The numbers were telling me that this was a growing company. They were starting to become profitable. Now they're profitable 5 out of the last 3 quarters. and they're just slowly overtaking over the car industry. So I stayed focused, and I was focused on the numbers and what the data was telling me, rather than reading all the headlines that were going on the news. So, and as you can see, it has paid off well for me. I bought at 248. The stock is almost at 500. And it just goes to show that when you focus on the fundamentals and not invest with emotions about fear of what's going to happen to the stock, that's how you make your money. And that's kind of the Warren Buffett style of investing, looking at the fundamentals. Just kind of pick the good time to buy based on the numbers and forget about it, because eventually in the future, it's gonna, bring you in a lot of money. You don't want to worry about the day-to-day fluctuations that happen, because the stocks go up and down every single day based on whatever is going on. But in the long term, they're gonna eventually go up. But anyways, I just wanted to share my thoughts with you in regards to buying and selling without letting emotions dictate your actions. You always kind of want to make sure you have a contrarian mindset, always doing the opposite of what the herd is doing. I hope you got to learn a little more about the psychology behind investing, and you got a ton of value from it. With that being said, thank you so much for watching, and I'll see you next time.